Record high home prices. Which states are the most expensive? In June, home prices soared to unprecedented levels, intensifying the challenges faced by an already struggling housing market. The median price for homes sold during this month reached an astonishing $435,300, marking a 2% increase compared to the same period last year. This also signifies the 24th consecutive month of rising prices, as reported by the National Association of Realtors, NAR. However, the sales of previously owned homes experienced a decline of 2.7% on a monthly basis, resulting in a seasonally adjusted annual rate of 3.93 million homes sold. Joel Berner, a senior economist at Realtor.com, pointed out that the number of home sales has not dipped below 4 million since 1995, indicating that we are on track for the slowest sales year in 3 decades. Interestingly, while sales plummeted in the Northeast, Midwest, and South, there was a modest increase in the West. Year-over-year comparisons show a decline in sales in the Northeast and West, but an uptick in the Midwest and South. According to U.S. Census data, builders are currently constructing the smallest homes seen in nearly 14 years, which raises concerns about the availability of affordable housing options. Lawrence Yun, the chief economist at NAR, attributed the record-high home prices to several years of insufficient supply, particularly for first-time buyers. He emphasized that home construction has not kept pace with population growth, which is preventing many first-time buyers from entering the market. Yun stated, more supply if needed to increase the share of first-time home buyers in the coming years, even though some markets may currently appear to have a temporary oversupply. In a related note, high mortgage rates are exacerbating the situation. Yun mentioned that these elevated rates are discouraging potential buyers, leading to home sales remaining at cyclical lows. He suggested that if average mortgage rates were to drop to 6%, it could enable an additional 160,000 renters to transition into first-time homeowners, thereby stimulating sales activity among existing homeowners. While June saw an increase in sales prices, Berner cautioned that this figure should be viewed with skepticism. Typically, prices rise during this season, and more importantly, listing prices have remained stagnant, indicating that the lower end of the market is not experiencing much movement. We are observing relatively flat behavior in listing prices, yet sale prices continue to climb, Berner noted. Essentially, the upper segment of the market is thriving while the lower segment struggles. Data reveals that affluent buyers are gravitating towards higher-priced homes, effectively sidelining first-time buyers from entry-level options. Berner explained that the current market activity is predominantly concentrated in the higher price tiers across the nation, which is why the average sale price appears inflated, not due to a widespread increase in home values. To stimulate more activity in the lower tier of the market, a reduction in interest rates is crucial. Realtor.com has recently predicted that the benchmark 30-year fixed mortgage rate could decrease to 6.4% by the year's end. However, Berner expressed uncertainty about whether this change would significantly impact the market. As of Thursday, Freddie Mac reported that the average rate for a 30-year fixed mortgage stands at 6.74%.